Hello, trader. So the pounds yen entry, this reading count that we did have there. Okay, now a lot of you guys seems not to understand this whole move here. See this O, this is A, why this is B. The whole formation here is B, why this is wave C that we're leveraging on. Now, the wave C, I could have well labeled this as my starting point of wave 1, right? Within that of wave C, I have 1, 2, and 3 is what is going to what? Go down. But in wave, I usually call this a reading count. My priority is to be able to count it several convergence of price in the structure. If you look here, 1, 2, 3, 4, 5, which is why when price was going backward, it was a clear indication that this market is going to go back to this whole area here, which is why I did this analysis even before it did what? It did play out for every one of you guys to what? To leverage on. So this is a clear opportunity for you all to capitalize on taking entry on these pounds here. Now let's go back to the analysis. Now it's not a must for you to leverage on that of the weekly time frame. You can always leverage on that of lower time frame, which is why I start my counting from that of lower time frame. Simply, we are looking for opportunity to trade in line with the impulse, which is a clear indication. This is wave 1, right? Wave 2, and it's the wave 3 that is going what? Upward. Now, a lot of you guys ask question that, is it time for you to start selling? No. Wait for price to test this downward trend line. So for me itself, I will have even wait for price to wait, but I booked most of my profit last week. I will have wait for price to get to this whole area here, around somewhere here. That is the horizontal resistance level. Then I wait for price to come and close below, inside that of the downward trend line, which that will give me a clear confirmation for us to leverage on the trade. Now, what did I mean by that? Let's go and let me sketch it for you guys to see. Did you see this? So this is what I mean by that. So while we look for opportunity to sell the market downward. Now, price is likely not going to move like this instantly, but before you short at this whole area here, now this is the resistance levels, which is this horizontal resistance area, right? So when we have a clear resistance levels, we should look for bearish reversal candlestick. Such candlestick can be bearish Arami, bearish engulfing. It can as well be what? Bearish railway track pattern. So those are the candlesticks you should look for there to short the market. But don't short it in as much the price is still above the area. Wait for price to close below it and you look for bell and short the market down while your stop loss is going to above the horizontal level. Now, the other thing you guys need to capitalize on this whole trade here, if you are selling from here, once price get to somewhere here, you should break even your trade, or excuse me, when it move greatly to it somewhere here, you should start trailing your what? Your trade. But the moment it move greatly, at least to somewhere around this area here, those of you that want to sell, you should look for what? Move your stop loss to entry and allow the market to play out. Now, last week also, I sent this analysis to you guys. Now, the reason why we did take this trade, which is that of the GBP New Zealand. Let me go to the entry itself. The entry I call out is this. Let's go to the entry. I'm coming. The entry itself. Let's go to the entry. This was my entry. Now, this entry, yeah, you can see it here. Now, the reason behind this whole trade, it has to do with this, which let's go to this whole area here. Resistance levels broken down to what? Support. That is the area price came to test. Let's go to daily time frame so that you guys can see it clearly. Now, let me remove this join. Remove join. This is a clear what? Horizontal what? Resistance level. Broken out onto what? Support. Now, the moment price breaks it, if you pay attention to what price is doing here, we clearly have obvious rejection. All these rejection, they are all indication that there are forces of buyers in the market that wants to push the price where? Upward. Now, when we go to lower time frame, on that of the higher time frame, it is a clear indication that we should be looking for opportunity to go long. Now, going to lower time frame, if we apply our downward trend line like this, right? Breakout and what? Retest. This is a bullish what? Engulfing candlestick, or you can as well call this trade morning star candlestick. So here was our confirmation entry levels, which is why I gave the entry around somewhere here while our stop loss is somewhere here. And we're able to book all this what? Profit. Now, the main analysis itself is not that I did not capitalize on the analysis itself alone. So what I did on the lower time frame alone, what I did capitalize is what the higher time frame is telling me. Now let's go back to daily time frame. Now, when you look at this daily time frame, we all know that this is a resistance level. We could not turn towards support. You see all these weeks, this rejection, this week here, they are all reversal candlestick. Your priority is to mark up the level from the higher time frame, while you switch to lower time frame and wait for reversal momentum to go in the market in the direction of the rejecting area. So that was the reason behind the whole trade. Okay, there is possibility that when price get to this whole area again, it's likely going to go backward, upward also. So we all need to pay attention to these levels. If it gets there, it's likely going to go back upward. But I also have another wave count on this whole analysis. It can as well pull back around somewhere here. But if it's going to be a long time trade, it's going to be a buy, we should wait for at least price to move greatly to somewhere here. Then we can look for opportunity to buy the market up. Then this will now be wave one. This will be wave one, right? And wave two, which is the wave three. You will buy the market well. Also, if we apply our fib retracement level from this low here to this high, you can see the rejecting levels is what? 61.8% ratio. So best you allow the price to move at least probably around 38.2% ratio. Then you can look for opportunity to sell the market. And also, it is clearly obvious that we have A, B, C. So those are things you should look out for. And within that of wave one also, we can as well have this. This is support.
Incoming mail.
1, 2, 3, 4, 5. Right? Did you see this? So all these are stuff you need to what? Pay attention to. So those are things I'll be looking out for on this analysis. Regarding this, it will still go upward. So it's not yet time for you guys to start what? Selling. That's my take on this, okay? Which is why I have all this whole entry I was able to what? Leverage on. Okay. Now let's go to that of the NASDAQ. This NASDAQ was also analysis I gave to you guys last week also. This is it here. Like I said, next week we look for opportunity to buy at this the breakout, which it did. So if you all pay attention to this, this is the resistance levels there, broken down to what? Support. When price breaks, it came back to test, it present a bullish reversal candlestick. Bullish what? Around me. Here was our confirmation, which is the reason why I call out the trade for us to buy the market upward. So my look on it is that price is still going to go upward, completing that of our wave 3. You see all this whole move here, there should have been our starting point of wave 3. But we missed it. But we can always what? Leverage to trade in line with what? The trend itself, which is why we buy the clear breakout of that of wave 1 retest to buy the market upward. And our stop loss is around somewhere. Though last week I already gave instruction because of the news that they should move their stop loss to what? To a little bit above entry, which is this Olega here. So my take is that it's going to go upward. So as it moves greatly, we'll also what? Add more entry. Now let's go to that of gold. Like I said, this gold here, this counting is not that of the impulse. I only capitalize on this whole move here. I only capitalize on the whole move. Okay, so on the norms, this should have been wave A. This is the triangles that be wave B and wave C going downward. So, but because I never capitalize on that of the higher time frame, look, just sticking to that of this 45-minute time frame. And I also gave instruction last week that this trade there, let me go to the trade. You can see my first projection on it was this. You can see I should get back to this 38.2% ratio before we look for opportunity to buy. Now let's go to this. I wrote a message last, you can see, because of non-pound way, I won't take advantage of the what? The trade. Though it presents to us a bullish engulfing candlestick, but when it comes to triangles, to me, these levels, if you are taking entry around somewhere here, it is more what? Aggressive entry. I love to take entry around the breakout above here, the breakout above that of wave D, while my stop loss is going to be half of that of wave E. Those are things I usually do. So conservative entry is this break out of that of wave. Why this illegal entry is what aggressive entry. I've traded several triangles. Those of you that want to know more about the triangles I've traded, you can go through this the whole platform here. You will see a lot of triangles I've traded, which you can learn one or two things from it. Okay, the convergence and that of the expanded triangles. I've traded several triangles. You can go to the platform, you'll be able to see, including on that of what? On that of gold. And this is how to label what? A bearish what? Triangle scenario. Okay. So now let's go to this whole analysis. I want to show you an example of the triangles I traded. Okay. On gold, there is one. Okay. Sometimes we are likely going to be short. This is 2022. Okay. You can see the date, June 27, and the result after. Now, the other thing I want you guys to pay attention to is that when it comes to wave principle, upon completion of a triangles, what it simply means is that the dominant trend are going to resume. This is an example of expanded what? Triangles. Okay. So this also was April 27, 2023. Here was the result after. Okay. Now I want to, okay, this is the gold I want to show you guys. You can see here was a triangle, September 2023. You can see it here. So what triangle simply means is that the dominant trend are going to resume. You see this whole counting here, our counting here is based on this time frame. On a norms, it's not meant to be like if I capitalize on that of the higher time frame. I was only looking for a way to leverage in line with what? That of what? The lower time frame alone. Now, this is my first entry on January 2025, our first buy upon completion of these triangles of that wave 4. You see this whole move that we are buying upward now, it is that of extended wave or fifth wave. So there is possibility that gold, it will still go upward to this whole area here. If you have not watched this video, I explain in details much about gold. You guys can go and watch all this analysis here, okay? Even the GBP New Zealand of that of wave principle, I explain why we should leverage on it here. You guys can go and watch it. You'll be able to what? Learn one or two things from it. Yes, I want to show you the gold entry. So the gold, these are part of the gold entry, okay? Base channel, right? This is the January entry. You can see it here. This is the January entry, and here was the result. Okay. Now, this whole move now, what I'm looking at on the gold now, it's simple. Let's look at this. If you all look here, we clearly have a structure, very short structure forming, which is this, right? Capitalize on, we want to look for opportunity to buy in line with the bullish structure itself. That's what we want to do. We can always pinpoint this our starting point of wave, right, which is a support. Why this is going to be wave 1, right, wave 2, wave 3, wave 4, and this is wave 4, and we'll look for opportunity to buy the wave 5. Now, one thing I want you guys to pay attention to is that there are strict rules in that of wave principle, which state that wave 2 should not get to the starting point of wave 1. You can see this is our wave 1 here. Wave 2 end there. If our wave 2 gets here, our counting is wrong. And the second rule states that wave 3 should not be the shortest. If you look this wave 2 here, end there, our wave 3 is this, right? Now, the third rule states that wave 4 should not overlap wave 1. If wave 4 get to the territory of that of wave, end point of wave 1, our counting is what? Is wrong. Which we believe that this will be our what? Possible end point of that of what? Wave 4. Now, having done this, we can always apply our fib retracement level, but priority should be fib retracement level are not structured. What they implies is that they are guideline, possibility area we will look for opportunity to what? To price should get to before changing what? Direction. We use it to take our profit target. Those are things we use fib retracement to or fib extension to do. But they are not a strict rule, okay? Just for you to pinpoint that possible level price is likely going to what? Get to. So once we have been able to do this, note this is the top, the higher time frame what? Analysis. And it turned at that of what? 38.2% ratio. Now I want to look for opportunity to trade in line with what the higher time frame is telling me. Simply, I want to look for opportunity to buy. All you simply need to do, it's simple. We all can see the starting point of wave 1. Within that of wave 1, I can label subwave, which is 1, 2, 3, 4, 5, right? So let's change the degree to probably this. So let's change the degree also to this and change the color to red. Okay, now you can see this, okay, which is this. Even we did that of this with 5 here, I can as well label subwave within it. Okay, so I can label subwave within this. Okay, so but let's capitalize on what we're looking out for. Okay, now within that of wave 4, this is, excuse me, wave 2, this is going to be A, B, C, right? So let's change the degree also to the least, okay, because it's subwave. Okay, now this, okay, so this, okay. Now within wave 3, you have an extension within it also, subwave 1, 2, 3, 4, 5. Okay, so that's subwave. Okay, now I want to label that of wave 5 of this because I have a subwave on it in it also. So this will be 1, 2, 3, 4, 5. Right, let's change the degree and keep to this. This, you can see. Okay, so this and adjust this. Okay, so now our look now is that if we apply our field retracement level, let's see the priority, like I said, field retracement and extension, they are not strict rules. What they simply implies is that possible endpoint. Now if you look here, here is the starting point of our wave 1. Wave 2 end where 68.2% ratio, so we stick to that levels there. Okay, while we uncheck every other levels we are not using. Did you see? We stick to this. Okay, okay, now let me even change this degree to bigger one so that you guys can see it clearly. Okay, now you can see this. Now we want to know the endpoint of this third wave here that went upward there, this third wave. Click on your fibot extension from the starting point of wave 1 to the end point of wave 1 and to the end point of that of what? Wave 2. Now wave 3 endpoint. Mostly our wave 3 usually end what? 161.8% ratio. It can get to 200% ratio. It can get to 261.8% ratio. But between 161.8% and that of what? 261.8% ratio, that's the key area price wave 3 usually get to. But most common one is this. So let's keep to this, which is the endpoint of this wave 3 now. So let's uncheck every other levels we are not making use of. Okay, we keep to 161.8% ratio. Okay, note, you can as well change this to value. You understand, this is percentage. I can as well change it to what? To value. You can see it here. I can as well put it to what? Percentage. You can see it. So let me uncheck every other levels and the extension. So now our look now should be, like I said, the third rule state that wave 4 should not end overlap wave 1. This is the end point of our wave 1, which is this, right? So no matter how the retracement is going to go, this whole move, price should never get to these levels. If it get there, all our counting is what? Is gone. We need to count again. Now let's go to this whole analysis. If you look here, we want to be able to do what? To capitalize on that of wave 5. We want to know the end point of wave 4. Click on your fib retracement. Click from the starting point of wave 3 to the end point of that of wave 3. Now, the most common area wave 3 usually end is that of what? 38.2% ratio. Sometimes it can get to this level. It can retrace at this level, pull back from here also. But it should not get to what? 61.8% ratio. If it did, our counting is also what? Is wrong. Now, let me show you an example of 38 point, the good, if you look here, 2023 December 10, you can see that there was a rejection at that of what? 50% ratio. Price did not overlap my wave 1, which is this. Had it been it get to this my wave 1 here, my counting is going to be wrong. So you can see here also I leverage on that of the fifth wave, which is what I did, and price did move what? Greatly. Never what? Get to my stop loss, which is that of invalidate levels. Now let's go to the analysis back. So on the gold now, we will keep to that of between 38.2% ratio and that of what? 50% ratio. So let's uncheck every other levels we are not using of. Okay, now we don't need this, we don't need this, we don't need this. So why we stick to that of what? These two levels. Something I usually do, which I want you guys to pay attention to also. Now, it is that of the wave 5 where we want to buy upward. There is possibility that this whole wave 5 can as well what? Be an extension. Now, within that of wave 4, there is something you guys need to understand. This whole move here, it is a correction, right? It is a what? A correction. This wave 4 also here, it is also a what? A correction. Now, one thing you all need to understand is this. If wave 2, it is slope, have it in mind that wave 4 is going to be what? It's going to be sideways. If wave 4 is sideways, wave 2 is going to be slope. If wave 4 is slope, wave 2 is going to be what? Sideways. So it is vice versa when it comes to that of the correction of that of what? Impulsive count between that of wave 4 or wave 2. Now, also within wave 4, you can easily see that we can label what? Subwave within it. So within this wave 4 here, we have what? A, B, and C. Now, so in summary, we will look for opportunity to buy, but I will advise you all to be extremely what? Conservative. Wait for price to move to these levels here. So price doing something like this. Let me sketch it for you guys so that we can always what? Leverage on it. Before that, we want to know the end point of wave 5. Click on your fib extension from the starting point of wave 3 to the end point of wave 3 and to the end point of that of wave 4. Now, our wave 5, the end point of that of our wave 5, which I want you guys to pay attention to. Note, I believe wave 5 should get to this level between 61.8 and 78.6% ratio. So let's uncheck every other level we are not making use of. Where we keep to that of this. So we keep to the remaining levels that we will use. Okay, this we don't need it. We don't need it. So our look now should be this, which I want you guys to pay attention to. Okay, now it is that we'll be looking for opportunity to buy the market upward. So you can buy the market now, but it is best we should do what? We should wait for clear breaker. Those of us that are extremely what? Conservative, around somewhere here. Okay, so add. Okay, now while our stop loss is going to be here, our stop loss is going to be here, which is going to be invalidate what? Levels. Okay, so we can put it at the end point of wave 1. Now all this whole move is what we're going to do. What? We're going to buy the market where? Upward to somewhere here. Our first target will be this, second target is this. Okay, so my anticipation now is that there is possibility that gold is going to get to 3,600 levels. Okay, so there are other things I usually do, which I want you guys to pay attention to. I usually make use of parallel channel, right, to make the analysis look more what? Presentable. Okay, if you look here now, these are things I usually what? I usually do. So let me uncheck this or fade it out so that you guys can and remove this. Remove this. Okay, so by the clear breakout, or let me add it so that we'll send the analysis to those of you in the free channels also so that you can leverage on it. So that's this on this analysis. Okay, so note, once price break this area, those of you that don't want to leverage on the aggressive entry now, once price break the levels, you can move your stop loss to below 50% what? Ratio. So while you withhold the trade, from this whole area here, you can withhold it to this levels there. Okay, it's a good what risk reward ratio. So all you just need to do is to have that patience, the mindset to withhold the trade. Okay, it can take several times, which example of such trade are these I've shown to you. Here's another one. This one only I think this one took us around there probably 17 days before it get to the levels, although it get to this area here, but I book all my profit here on it. That was then. Here's another. These are wave. Okay, these are advantage of trade I did color last year also. Okay, you can see. So took us several days before it get there. July, then where August what? This one took us a month and a half. And why did I book profit here? I book profit around somewhere is because of these resistance levels there. Though before it retraces and go backward, upward. Okay. Here's also another one. So you'll be able to learn one or two things. You can always go to this channel. You'll be able to see one or two things also. Okay. Or those of you that have interest in my upcoming Elliott Wave Masterclass. Okay. You'll be able to know how to do all this stuff I'm explaining to you, not just the short stuff that we're explaining now. You will know a lot in detail. So if you want to enroll, you can always fill the form of the upcoming master class of Elliott Wave Principle. Okay, so this is how we traded gold this year so far. So hopefully this is going to be a key potential trade for us as we start the week. So those are my take on this. And the EURUSD analysis, this is correction phase. I said something to you guys now that if wave 2 is slope, have it in mind that wave 4 is going to be sideways or form a channel. Okay, now on this whole entry here, I believe this EURUSD is likely going to fall downward. Why this should go upward? This, it will fall downward to complete our correction. So this price is likely going to pull back around somewhere here. So those of you that leverage on the whole entry here, so make sure as it moves today, probably this new week, as it gets to this area here, you guys can move your stop loss to entry. I'm also in the trade also. So if you want to know more about the whole top-down analysis, follow me on YouTube or that of TikTok. I will always drop the analysis for you guys to leverage on. So thank you all. Bye.